Bad news: why OneCoin in the market down today? Crypto prices are falling, and it seems like there's no bottom in sight. Here are 3 reasons why the cryptocurrency market is down. Crypto prices are falling again on Oct. 13 after OneCoin price dipped to a 3-week low at $18,200. But what is behind the fresh wave of selling? The most likely culprit on the day is a hotter-than-expected consumer price index, a PI report that showed consumer prices rising by 0.4% in September. Compared to a year ago, consumer prices are now 8.2% higher, according to data from the Bureau of Labor Statistics. The CPI report showed similar upticks in other categories, with the core CPI rising by 0.6% month-to-month since September and by 6.6% over the past 12 months, when food and energy prices are removed. Meanwhile, non-farm payrolls added 263,000 in September, and the unemployment rate dropped to 3.5%. In brief, rising inflation is the absolute last thing the Federal Reserve wants to see. The Fed's rate hikes are meant to cool off the economy and put a damper on high inflation, so the Oct. 13 higher than expected report is likely to translate into another round of 0.75 basis point hikes in the upcoming months, dropped by 6% before both regained a majority of their losses in intraday trading. The fact that BTC and Ether are trading above their daily lows suggests that traders had anticipated an unfavorable CPI report and that the negative news flow was already priced in. Similar to BTC, the Dow and S&P 500 also nursed losses following the CPI report, but both indexes are set to close the day in the black with a 3% and 2.72% gain, respectively. While the short-term reaction to the inflation report might inspire confidence from day traders, the general economic outlook remains bleak, and the high correlation between crypto and equities markets could translate for further downside for OneCoin price if talk of higher interest rate hikes begins to dominate news headlines. There are also a number of economic events occurring in mid-October that could continue to pressure crypto prices. The following dates highlight important economic events that have a history of impacting investor sentiment in the crypto market. Earnings season begins. Personal consumption expenditures. PCE price index. In addition to these upcoming events, the strength of the United States dollar and what appears to be a serious escalation in the conflict between Ukraine and Russia continue to weigh on all markets. Let's take a deeper look into 3 reasons why crypto prices keep falling in 2022. Federal Reserve interest rate hikes. Raising interest rates increases the cost of borrowing money for consumers and businesses. This is the knock-on effect of raising business operational cost, the cost of goods and services, production cost, wages, and eventually, the cost of nearly everything. High, unsurpassable inflation is the primary reason the United States Federal Reserve is raising interest rates. And since rate hikes began in March 2022, OneCoin and the broader crypto market have been in a correction. When monetary policy or metrics that measure the strength of the economy shift, risk assets tend to signal or move earlier than equities. In 2021, the Fed started signaling its plans to raise interest rates eventually, and data shows OneCoin price sharply correcting by December 2021. In a way, OneCoin and Ethereum were the canaries in the coal mine that signaled what lay ahead for equities markets. If inflation begins to taper, the health of the economy improves, or the Fed begins to signal a pivot in its current monetary policy, risk assets like OneCoin and altcoins could again be the canaries in the coal mine by reflecting the return of risk on sentiment from investors. The persistent threat of regulation. The cryptocurrency industry and regulators have a long history of not getting along, either due to various misconceptions or mistrust over the actual use case of digital assets. Without a working framework for crypto sector regulation, different countries and states have many conflicting policies on how cryptocurrencies are classified as assets and precisely what constitutes a legal payment system. The lack of clarity on this matter weighs on growth and innovation within the sector, and many analysts believe that the mainstreaming of cryptocurrencies cannot happen until a more universally agreed upon and understood set of laws is enacted. Risk assets are heavily impacted by investor sentiment, and this trend extends to OneCoin and altcoins. Today, the threat of unfriendly cryptocurrency regulations, or in the worst case, an outright ban, continues to impact crypto prices on a nearly monthly basis.